All right, welcome to Talk Tickers. Today we are jumping right into F5's first quarter earnings for fiscal 2026. And wow, this wasn't just a good report. This was what Wall Street calls a reset higher, a moment where the market is forced to completely rethink a company's future. And we're going to break down exactly why. Okay, so here's the game plan. We'll kick things off with the absolute blowout numbers from Q1. Then, we're going to pop the hood and look inside the engine room to see what's really driving this thing. After that, we'll see how management is raising the bar for the whole year, how the market is waking up to this story, and then we'll wrap up with our take, the next call.
All right, first up, the results. And look, to put it plainly, F5 didn't just beat expectations, they absolutely shattered them. So the number that really made everyone sit up and take notice was this one, non-GAAP earnings per share of $4.45. Now that's a huge deal. It crushed what the analysts were expecting by 80 cents. We're talking about a 22% surprise to the upside. Just massive.
And believe me, that outperformance wasn't just a one-trick pony. Just look at this breakdown. Revenue, $822 million. That's a full $66 million more than the street expected. And the engine behind it all? Product revenue, which, get this, has now grown by double digits for 6 quarters in a row.
So you gotta ask, right? What is going on here? Where's all this momentum coming from? Well, according to management, this is not some flash in the pan. They're basically surfing 3 huge long-term waves in the industry.
And it really boils down to these 3 massive trends. You've got companies jumping into hybrid cloud setups, you've got this absolute explosion in AI investment, and then there's this big push for companies to simplify, to consolidate all their different security tools. So let's see how that's actually showing up in the sales numbers.
Okay, now this is where the story gets really fascinating. When you peel back the onion a bit. Look at this mix. Systems revenue, that's the hardware. It jumped an incredible 37%. That's a direct line to that AI spending we were just talking about. Now you see, software dipped a bit, but that's mainly because they were up against a ridiculously strong quarter from last year, what we call a tough comp.
And if you need any more proof, just listen to what the CEO had to say. He said, and I'm quoting here, "In Q1, we added nearly as many AI customers as we did in all of FY25. I mean, let that sink in. That's not just growth. That's a company shifting into a whole new gear. It's an incredible acceleration and a huge sign of things to come."
And another really important point, you might remember there was a security incident a little while back. Well, management says it barely caused a ripple in demand. In fact, they think their quick response might have actually made their relationships with customers, and especially their security chiefs, even stronger. Pretty interesting turnaround. Okay, so a great quarter is one thing, but what about the future? Let's talk about the guidance, because this is where a company really shows its hand, right? A big raise tells you they're truly confident about what's ahead.
And here it is, the big payoff. Look at the difference. They didn't just tweak the numbers. They took their revenue growth forecast from that 0 to 4% range all the way up to 5 to 6%. And earnings? They boosted that by over $1 at the midpoint. This is a company fundamentally re-rating its own business right in front of our eyes.
Now, it's not all completely rosy. There is one thing to keep an eye on. Management did flag that rising memory costs could be a bit of a headwind for margins later in the year. But they also said they're already working on ways to manage it, so it's something to watch, not panic about.
So, with all this incredible news, how did the market react? Remember, Wall Street was being pretty cautious on this name heading into the print.
Well, the reaction was fast and it was furious. The stock shot up almost 11% in after-hours trading. That's the market basically being forced to say, whoa, okay, we got this one wrong. It's a real-time repricing of the entire story.
Okay, so that brings us to the big question. What now? What's the trade from here? How do you play this going forward?
All right, so here's our take, our next call. We think this is way more than just a single good quarter. You've got these incredibly durable trends, especially enterprise AI, that are going to be a tailwind for years to come. So the play here, as we see it, is to look past the short-term noise and focus on this multi-year tailwind. If the broader market gets shaky and you see a dip, that could be your entry point.
So putting it all together, we're initiating our view with an outperform rating. You've got accelerating demand, you've got strong execution from the team, and you have that massive confidence boost from the guidance raise. It's a really compelling story. The conversation is no longer about if F5 can grow, it's about how fast.
Now, of course, this is not financial advice.